All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Monday, June 28th. Risk disclaimer in front of you, everything that we're going through here is for information purposes only, not giving out any recommendations or advice. This video is for information, educational purposes only. So let's get to a couple themes of the day. Well, a lot of rotation out there again. And overall, you could see on the bottom left of my screen, just weaker breadth once again. And by the way, if the screen is blurry for any reason, if it's not coming in through crystal clear, it is just because YouTube takes a while to go ahead and render the high definition version of the video. So just sit tight, maybe close the video and reopen it about 20 minutes later, and it should work for you. But yeah, going back to the themes of the day, weak breadth. On the bottom left of the screen, I can bring up the raw numbers here, but you could see that for the Dow. Always kind of start with the Dow just because it's the easiest. There's only 30 names in there. But you had 20 decliners in the Dow today, only 10 advancers. In the S&P, not as bad as a skew for that. 298 decliners, 207 advancing names. NASDAQ, also kind of the same thing here too, but maybe not nearly as bad as the Dow. 1,632 declining names, 1,272. So what do we call this? We call this weak breadth for the day. However, there were some areas that really shined in the market. And it was kind of interesting. There was a couple themes that played out again. Of course, I put in here Rotation City, out of reopening trades and basically, back into some shutdown type trades. So just for example, right, if you want to take a look at the Jets ETF, that was down almost 3%. I don't know, I didn't see what the cruise lines did. I mean, the CCL was down 7%, Carnival. So yeah, I mean, and then if you look at things like Peloton was up 4.5%. So yeah, a little bit of what I like to refer to from Yankee great Yogi Berra is that a little bit of deja vu all over again. Are we going to have another shutdown? In terms of what the price action was like today and the sector movements. I think there was a lot of headlines that I read about what Europe is going through and with this Delta variant, and it looks like there was some kind of changes based on that. Some of those areas really outperformed. So this market is making it kind of tough if you're playing certain groups or certain areas of the market, and then all of a sudden they kind of flip, right? And especially when you have a day like this where even though the Qs were up 1.2% for the day, we're just not seeing unless you're completely all in high growth names, super high growth names. It's a little bit difficult to get a lot of all of your portfolio to be winners, right? And unless you're just in that one slice of the market. For example, the ARK Innovation ETF was up almost 4% today. Now, there was a few other catalysts at play. The second one was also what we saw in the gene editing names. There's a lot of names in that particular ETF that did very well on that, but that wasn't only that wasn't the only reason for the outperformance in the ARK Innovation ETF. Right? You also had a lot of solar stocks. You had a lot of clean energy stocks that were very strong today too. That was something that we saw last year too. Even as the country was in lockdown, those areas of the market did really well. So there's some things too going on. There's heat waves all over the place. It is now in New York City. I think it's like 92 degrees right now. This morning was fine. But I'm yet to go outside and make the commute home. But we're certainly hearing about this in the Northwest too. So we've got a heat wave coming, and I'm trying to think of the right phrase, but stored energy is in demand right now. So you're going to see a lift in some of these areas, and those were on top of the leaderboard. Solar stocks were up 6.3% for the day. Now, I actually made a change. Sometimes you kind of look at some of the stuff and you're like, oh, geez, you're not buying something that's up 6.2% for the day. But I actually rotated out of a portion of our TTG Trend Portfolio, which has 30 names in it. It's great for part-time investors because I don't change the whole portfolio around every week. I usually make a change or two once every 2 weeks. I've been a little bit more active the last couple weeks because of the rotations, but I got out of another material name and got into the solar ETF because you look at this and yes, big day, and I was considering going long this thing last week, but I just didn't know if it was going to stop at the 200-day moving average. So when you look at this, right, yes, it's made a nice move off the lows, but that's a small level considering where this was on the highs, right? So this was something that I had held. The solar ETF was something that I held all through this, and I think once it broke the 50-day moving average and it didn't make it, didn't fight back enough, I took this out. But like any trade, like any name, you could trim a name, get out of a name, and watch for when it is a signal for you. So this is what I refer to as kind of an easy trade. Now, again, you look at this for the day and you're like, oh, geez, chasing something up around 5 or 6%, sometimes that's not the smartest thing to do in this market, chasing. But really, it's just the first day it's over the 200-day moving average. So that's a very easy level to trade off of, in my opinion. Now, if you don't want to buy this today, I can certainly understand. You could wait for an inside day, or you could wait for a little bit of a pullback to add to your position. But, we're starting to see a lot of things kind of shape up here. I was long a couple names last week, and I had made some money in this sun run last week, and I started a position a couple times actually on Friday. I talked about this in Friday's video, but I just didn't want to wear the I didn't want to wear the risk in a high volatile name. It wasn't really acting that great on Friday, but boom, jumps up 5.7%. CSIQ is a name that I've been watching for a while, and it's funny how this works sometimes. Sometimes you just really have to stay patient with some names because this really gave you no signal, right? This is the value area for the month, and you didn't get one candle outside of value. No, it closed nicely on Friday, but you had the Russell rebalance. So who knows with names that where they closed on Friday? Many names reverted back, but look at the move today, right? Bottled up for a while, and all of a sudden, from nowhere, this thing goes up over 12% for the day. So very strong, and PBW is the other. ETF that I look at in the space. There's another one too, ICLN, but this clean energy ETF also had a big day today, as things like Workhorse and a few other names. We go through this ETF really quickly. Again, this is PBW, but you're going to see there is some overlap, but JKS was up 22%. DQ, which was a name that got beat up last week on those headlines that the U.S. may not, renew service with China for solar panels. I didn't even know that we're getting solar panels from China, but in any event, that name bounced back quite nicely today, up 12%. MAXN also up 13.5%, smaller cap name. NEO had a huge day, so a lot of the electronic vehicle stocks did very well today. This was a nice little neat pullback. Again, I've got my 2020 hindsight 2020 glasses on here, but this made a real nice move out of here, and maybe this can continue up to 56, which is the VPOC up there. So very fast movers again today. So those were the themes that I saw. Of course, the first one was the gene editing stocks, and I was long CRISPR. Right, that's a trade that I've talked about a few times. I took profits in this, and I actually got out of it. I was trying to hold the last piece, but it hit a trailing stop. So I'm very happy with getting in at this around 128, I believe, and getting out at 150. That's perfect for a name that didn't even have any good news. It was just pin action based on NTLA, which did have an offering too that I heard after hours. But congrats if you were in this one. You got a monster breakout, up 50% for the day. So yeah, so there was some themes, and then on the flip side, as Helen Meisler says on Twitter, right? This has been the either or market. It has not been the both market, right? It's very difficult if you're in some of these other areas of the market. Like energy has been acting fairly decently. That got hit over the head today, down 4%. I had a couple names too that got hit over the head today. Thank goodness I took a target in this late on Friday with the strength, but MasterCard was down 3%. These are also kind of a little bit more indirect, but these are also reopening plays, right? They've done well because people book their travel and so forth on credit cards. What did COF was a name that everybody started to warm up to recently too. This was down 2.5% today too. So these themes are still present. It's kind of amazing considering that we're talking about the Delta variant. We're not talking about the whole coronavirus where we didn't have last year, obviously, vaccines, but really severe reactions, I think, in some of these reopening plays that got hit pretty darn hard today. So we'll see if it's just a one-day, move or if there's something else going on. But yeah, if you look at some things like I pointed out, like the Jets ETF, like that. To me, this is not really a dip that I would buy in these because it's breaking a range. Now, there's a virgin point of control where maybe this will find some support, 2370, maybe the 200-day moving average if you really like the travel names. But, this looks like a pretty decent breakdown, right? And, some of those areas that bounced last week that I was a little bit concerned with, I had tried a trade last week in XLB, and I took it off because I didn't like the way it wasn't, I was afraid that this is turning into a bear flag rather than, pushing higher. So, I think right now, one of the things that I talked about in the room, and then I'll go over some of my trades and I'll go over some other charts here, but, just to talk strategies for just a minute. I think it's really important right now that, putting alerts on trades when they don't work, so that you could take them off, very quickly, so that it's a small loss, is very important right now. And also kind of keeping, everybody's different, right? Some people like to have big outsized positions, and that, if that works for you, keep doing it, right? Names where you've really got conviction in and you know how to trade around them, then stick with it. For me, I could tell you that whenever I have a couple names that are really outsized in my portfolio, sometimes they don't end up working, and it really screws up my portfolio because I get a bigger loss in those names. So I've learned from that, and I kind of have moved away from that strategy. So most of what I do is pretty balanced, right? Because I've known that sometimes that's the way it works for me, is sometimes you have a really strong feeling about a stock, and it could be just like something like this, right? Where all of a sudden, there's some type of rotation that some people just don't want to be in a MasterCard or a Visa right now, and it's out of your control, right? So I keep my trading account a little bit more, not perfectly equally weighted, but I try not to make any particular trade that big of a portion because we just don't have a crystal ball. We don't know how things are going to kind of move on a day-to-day basis. And so, the way that this market has been going, the either or market, you're going to have, like, if you're holding a decent sized portfolio, like I said in the beginning of this video, unless you're all in one area of the market, super high growth, which I feel is a bit risky, that you're going to have some winners and you're going to have some losers in this market. And the name of the game is to have more winners than the losers. So if you have a couple of these things that don't work, you got to get over it, in my opinion, quickly, right? And just say, hey, you're going to have a loss here and there, right, based on these rotations. But like I said, you hope that the winners outweigh the losers. So let me get into some of the names. So I mentioned CRISPR was a big winner for me. It was a big winner for me last week too. A couple other names, I caught this NRG pretty nicely. This thing actually closed close to the highs. I got out of this. A 6% move for NRG is kind of like what I was looking for this trade. Do I think this thing could go up to another buck to 42? I do. But, just saying, hey, basically, I'm happy with the gain. So I took this trade off today. Again, that was a name that I just put on Friday. I had talked about it a couple days prior that it had seen option activity. and that ended up working pretty well. Baidu was a name too that I thought was setting up, and this thing, and it just kind of goes to show you that in terms of the moves that we're seeing sometimes right around the open can outweigh like how the rest of the day goes. So Baidu was up I think around 2 or 3%, right? And you can kind of see this thing fade from the highs, but sometimes on the open, right? We know that. A good portion of the time, the majority of the moves happen in the overnight market, and sometimes the first 15 minutes is as high as you get. So I took my profits. This was a nice little trade, and again, just happy to put on something late in the day on Friday for 440, and take it off for 730. I did not roll it. I was thinking about rolling it into some stock, but right now I'm being a little bit more conservative going into month end. So that's the plan there. CALX, again, why did I take such a short-term target? Well, because you don't know, if these things are going to kind of carry through. Now this did close around the highs and is breaking out some, which I like that. Another one too that looks so similar to this too, which got capitalized on too, was Zebra Technologies, right? Again, started a call spread in this one because it's a high price stock, and the options are not exactly, very are very liquid. So I've been doing this from time to time with some options that are just very pricey, or the stock is very high priced, and going into a call spread instead. And you could see how well this works, right? So short-term call spread, but to put on something like this just a couple days ago, and Zebra, and where's this? I got my second target in this one. But again, some people shy away from, they just want to own calls, but you're spending less money, to get into these. So if it doesn't work, and there's, the one that I mentioned that didn't work, that's probably not going to work, is this MasterCard, right? But again, I'm spending less money because it's a call spread. And, like I said, thank goodness I took a little bit of a target there late in the day on Friday. I took the gift that this thing really rallied into the close. But, it really will lessen the loss. Because call spreads don't cost as much as outright calls. And you could see that the second target I took is only, I'm getting close to a double on this, right? So, it allows me to kind of stay in these trades a little bit longer, because they're not as expensive, right? So this is a trade that I'm still in. A couple new trades that I added for today. I tried this path. It's one of the first things I traded for the day. I could have kept this trade on, but right now I'm just in kind of like, hey, if I can get profits on this really quick. But here's an example of a VPOC, right? I know a lot of people aren't familiar with this subject, but it's really volume at price. And here's a great example. I call these things out just about in every, video, but it's just a great example of how a big area of volume that hasn't been revisited, right, can act as a magnet and then fade, right? So this thing took this thing out to the penny, and and again, like here's one down here too, right? Took this thing out to the downside and then rebounded. So I don't know if this is done, but I'll have this path on my watch list going forward. But this was just too easy. Right, I got this move really quickly on the 1 hour chart, and happy to take this thing off for a quick couple dollars of profits. Right, Path was one. I was looking at a couple of these other names, like a Blink charging company. These names, I know that they can really catch big momentum to them, but you have to look at the other side of these companies don't make any money. So you have to be kind of quick with some of these things, because when the momentum runs out in these things, they could really go down fast, as we saw earlier in the year. So I would rather own the ETFs with some of these things. Like I mentioned with the solar ETF, TAN, right? You're limiting your single stock risk, and the ETFs, the clean energy, the solar ETF, they move fast, right? a lot of times people don't like to use the ETFs because they don't move fast enough. They think that they can find more alpha in the individual names. But when you're talking about a solar ETF or a clean energy ETF, where, believe it or not, it's sometimes it's all or nothing for the group, right? Sometimes it's not so much one name is going to be the leader. Now there are leaders within the group, but sometimes it's either the group is going to move or it's not going to move, right? It's usually not going to be, unless one stock has particular news or it got upgraded that day. But most of the time, the solar group is going to move as a group, and it's the same thing with the clean energy group as well, right? You could be very lucky with picking the individual name that happens to get upgraded, but I think it's just a lot easier to limit the single stock risk and go into one of these ETFs. But again, that's my style. Um, you know, so another one that I started today was CARR. Right, this is one that we talked about in the weekend watch list name. Really like this move. Kind of goes with the theme of, it's hot outside, air conditioning. Redoing of central air and things like that, and renovations and so forth. I think this is kind of right in the wheelhouse of what kind of environment we might be in. What else for the day? A couple other things too. I mentioned that, and just kind of scaled out of some positions here. We're getting to the end of the month. I always get a little bit more conservative. To the end when I get to the end of the month. I've had a pretty good month in terms of trading. I'm pretty content right now. Because again, I don't know what's going to happen the last trading day of the month, but they've been whippy sometimes. So I would rather be a little bit more conservative and start the month fresh, right? And not have to think about that. Today's the Monday the 28th, but we've got 2 more days. So I just don't want to put myself in a bad situation, being that sometimes we see that. Not 100% of the time, but sometimes we see a little bit more volatility. I didn't get to talk about this one last group, which I'll mention here. I was going to be on Bloomberg TV today, but I got bounced because of the Facebook news. They had a tech legal person on to where they really wanted to speak with them, which is fine. I understand breaking news. But take a look at the semis here. So, I spent some time also talking about skew. Which was something I was going to talk about today on Bloomberg, right? A lot of attention about the skew index, and I will just give you a couple quick sentences about my findings. When you look at this skew, if you're not familiar with the definitions, just Google skew, and Investopedia will give you, you could read the definition and what it means in under a minute. But really, what it measures is tail risk in S&P options. So unlike the VIX, right, that measures at the money option pricing, skew measures what's going on in pricing for out of the money, right? And what happens is, if those prices of the out of the money options are going up, meaning people are purchasing insurance that's a little bit away from where the current market is, right? What happens is those prices will get elevated because of demand. That means skew goes higher, and that's kind of what we have right now. When you look at a 5-year chart of skew, it's actually at an all-time high. So for whatever reason, people are purchasing a lot of out of the money puts right now. Now, does that mean that we're going to get a market crash? Well, take a look at the timing of previous spikes in the skew. Right? Now, you could argue that, hey, maybe we did have a big decline, but this was a year prior to that. So, is that right? Is that a year? Maybe not a year. No, this was at the end of. Sorry, that's wrong. That was at the end of 2019 where we saw a spike in skew, and then a few months later we saw a pullback, right? And you could go through some of the other times, right? Here's one time where we had elevated skew and there was no pullback. We actually went higher. So there's a lot of false signals. It's not this thing, certainly just because skew goes up, it doesn't mean that we're going to have an immediate drawdown. But it's one of those things that you can kind of keep in the back of your mind in terms of positioning. I still think, regardless of looking at things like skew and some of the other indicators under the hood, I still think price and trend are more important than looking at things like skew, right? Because I know what I'm going to do, right? If we start to break down and price drops, and the S&P drops back below the 50-day moving average, or if it drops back below the value area for the month, I'm going to trim, right? And I'm going to have a tiny bit of losses, right? But that's the risk that you take in trading, right? This market right now is trending higher. Will we get a pullback in a few months? Probably, but it's impossible to time these things. It's just something that I've learned, right? You're just not going to time when we're going to get a pullback or a market correction. But you have to have a plan in advance, right? As the market breaks out and gets a bit overbought, you take more profits, right? And you look for the market to kind of rest and come in a little bit, and then you could add more risk, right? So it's a constant it's a constant process that we're doing. Now, that's the bad news. I wanted to get that out of the way. The good news is, look at what's going on with the semiconductors. They just broke out to new highs, right? This is something that we talked about at the end of last week as they were leaning for a breakout. And you go through some of these charts, they look great. So I went along some applied materials, but if you go through some of these charts, Lam Research might be finally waking up. This thing's been dormant now for a couple months. We know that this ASML has been one of the leaders, along with Marvell. Marvell is just unbelievable, isn't it? I know this guy gets all the attention, NVIDIA, which I'm long in the TTG Trend Portfolio, but that Marvell isn't too far behind. So really strong. And look at this stock, again, up another 5%. So I'm still long in the TTG trend. There's no sell signal. Are we overbought in NVIDIA? Sure, but we were overbought 3 weeks ago too, right? If you're using the RSI, right, here's where we were first overbought. This is at 684. That's over 100 points away. So it just goes to show you, single stocks, they can stay overbought for a while. So could I take a target here with this extended away? Yeah, I should probably do that. That would be a wise thing to do. So I might be doing that this week as far as taking some profits here. But I will not take this out of the portfolio just because it's overbought. All right, guys, so the video is about 26 minutes long. That's enough for the first day of the week. Have a great night, everybody. See you tomorrow.